I firstly have to apologize for the fact that I was expecting our group CEO, Kasturi Chelaraja Wilson, to be joining me on this call today, but she is unfortunately taken unwell and will had to go back home a little earlier than planned today. If I can have the presentation running up, Dulci, thanks a lot. So those of you on the call, as you probably know, Hemas is no stranger to the market, both in the country and also, in fact, in the region. We have focused our interest in consumer and healthcare. We have operations that currently cover Sri Lanka, Bangladesh, and India, and all these locations are managed and operated by staff local in that particular country. Revenues come to about 60% from the healthcare segment, and the balance 35% coming from consumer. Under healthcare, we have a couple of subsegments. We have 2 hospitals in the Greater Colombo area, one in Thalawathugoda and one in Wattala. We also have the pharma distribution and manufacturing segment, being the largest private player in the country. Home and personal care Sri Lanka has many leading positions in many key categories. The portfolio consists of well-known household brand names such as Baby Sharmi, Clogard, Diva, Kumarika, Dandex, and Velvet, amongst others. I'm sure most of you have in some time in your lives been touched by one or two of these brands at the very least. We also have international operations covering the home and personal care segment that includes Bangladesh, where we have the operation and the export arms of the business. Bangladesh covers hair oil and exports mainly regionally to over 15 countries. The consumer segment also has probably the household name in Sri Lanka, Atlas, the stationery brand name, where we have a significant share in the country. We have a smaller arm on the side that supports the 2 main core businesses, the healthcare and the consumer segments, and that's the mobility sector, where we have the GSA for both Evergreen and Emirates. If I can go to the next one. I wouldn't spend too much time on the macro economic conditions in the country. I'm sure all of us on the call, around the call, are aware of what's currently going on, basically in the country and in the region. We have seen the CCPI increase for the 10th consecutive month to reach 60.8% year-on-year in July, with rising food prices and non-food prices as well. Global commodity prices, however, we saw a slowdown on a quarter-on-quarter basis. However, the prices for all key commodities such as palm oil and paper are still approximately 50% higher than the same period last year. The political and economic instability impacted businesses, as we've managed to continue our operations with minimum disruptions despite the supply chain constraint. US dollar liquidity constraints and the shortage of essentials still continue to have an impact in our operations. Despite multiple initiatives, including import rationalization and restrictions on repatriations from foreign exchange of the country, the rupee continued to depreciate to reach 360 at the end of July. An 80% devaluation from both the December 2021 rate of 201 and the July 2021 rate of 200. This rate, as we all know, is currently being managed by central bank, and it's a little concerning to see that we still see the rupee continuing to be under pressure. Interest rates have risen by more than 3 times during the year and 2 times within the quarter. AWPLR, for example, has risen to 23% in comparison to June 2021. There's a rate of 5.7%, and the rate of 8.3% in December 2021. On a fiscal policy perspective, we saw multiple reforms being announced, including the VAT rate to 15%, which we've just probably seen being announced in Parliament, and corporate taxes going up to 30%, up from 24%. Personal income taxes are also revised as an effort to increase the government revenue. Whilst we understand the need for policy reforms to recover the economy, these will further impose pressure on both the consumer and businesses in the short term to medium term. On the current situation during the quarter, as we all know, there are the infamous default on external borrowings, which led to the downgrade of the country's long-term credit ratings to restricted default. This, coupled with unsustainable debt obligation, deteriorating forex exchange reserves, and the country's economic recovery, will depend very, very highly on a successful implementation of an IMF program. As we speak, IMF is in Colombo. We've seen some announcements coming out that we're very close to reaching a staff level agreement. Fingers crossed, we hope that we will hear some good news soon. And we will see the government working towards that end. Fuel shortages and power cuts are still very much present. We have seen queues starting again to form near petrol stations, and this is a sign that is not very good, which we hope, after listening to the energy minister, saying that this is short term and hopefully will be resolved very soon, maybe within the week. On the next slide, Dulci. Yeah, so some of the key strengths that we have, again, like I said, Hemas is not new to you. We have corporate governance at the highest levels. In fact, from my experience in working overseas for multiple listed entities, I haven't seen levels of governance as high as what we see at Hemas today. We have foreign non-executive, both foreign and local non-executive directors who have a very big say in the way the businesses at the board meetings are run, very different backgrounds, and purely all decision making is based on a governance perspective. On the plus side, we also have operations in very defensive sectors which are resilient despite the market volatility. As you've seen our results that we published in the first quarter, we saw good growth both compared to year on year and even on quarter, we did see us gaining some share in the market as well. One thing that is quite strong in our balance sheet is the low gearing level that we have. We also have a long-term credit rating of AAA stable that has been published by Fitch. It's a position that we continue to invest, which helps us to sustain and meet the headwinds, especially in the form of working capital requirements, and also continue to look for opportunities to invest in mergers and acquisitions that fits it within our portfolio. Hemas is successful because of our win-win relationship with our stakeholders, whether it's the key pharma principals, the strong supply chain partnerships, the banks, the regulatory authorities, and everyone who works closely with us to help us strive forward. On the strategy and creating value, our short-term plan is to grow market share. We believe that we still can continue to grow market share, especially in the current environment. We see market share growing in key categories of home and personal care and Atlas. We also will develop value-creating products. We continue to invest heavily in R&D and have done it done multiple launches to cater to the ever-evolving customer needs. HPC Sri Lanka recently, I'm sure you are aware, launched Vivia, which was an affordable and mid-weight range and a mid-weight range product for Diva, which is 700-gram pack, I think, and Klogard variants such as Natural Salt and Pancha Shakti, with also new Baby Sharmi launches. In the international front, we saw Bangladesh launching Eva by Kumarika and also the personal care soap Actisep. Atlas launched its unique triangular pencil and also has recently launched the learning platform targeting grade 5 kids, which has gained a lot of traction. The flagship plant, the pharmaceutical manufacturing plant that we have under Morrison, has commenced manufacturing operations and has also already started putting products, branded generics, into the market. Impha tablets, which is 10 and 25 milligram, was launched in 2021. Bisulfurol tablets, BP 5 milligram 250s, and Racestatine, which is also known as Crestor. We have just launched a 10 milligram 30 blister. We have also launched a chlorpheniramine maleate product, which is a 4 milligram hundreds blister pack recently. All these products have had huge traction in the market, and we're very happy with the progress that these have made. These have made high demand products being made more affordable and easily accessible to the people in the country. We continue to supply the government. We do still face challenges in the form of the buyback agreement, but we are working around that to make sure that Morrison will maintain and achieve its targets as we grow. Expanding in the regional footprint, over 70% growth in export revenues. High focus has been on internationalization with Atlas and Home and Personal Care taking the lead. On the mid and the long term, we look at did I miss something? Sorry, yeah. We also have looking at maintaining an optimum liquidity position. One thing good that Hemas has done and actually has done with a lot of success was centralizing, having a very strong centralized group treasury function, which obviously then helps us leverage the size and the strength of Hemas to support all its subsidiaries within the group. On the long term, we are continuing to have acquisitions and expansion in consumer and healthcare. We're looking for multiple opportunities, and we have headroom to invest with minimum balance sheet pressure. Atlas's transition from stationary manufacturing to a learning platform has started paying some dividends that we have started seeing in that particular area. Sorry. We continue to expand our global footprint in the pharmaceutical exports. We're talking to principals where we could do contract manufacturing with long-term strategies to export to the EU using our EU GMP registered plant at Homagama, the new plant that we have at Homagama. We also have plans to re-enter the logistics space, which we will once we get the right opportunity. Next one, please. I think the slide has got stuck or... Sorry, we seem to be having a technical point. Okay, yeah, we just managed it. Our strategic building blocks, as you can see on the screen, we will continue to focus on building from the core. We will accelerate current business efforts to drive higher value in the core businesses. This is what we are good at doing, and we're doing it well. We'll also focus on underlying volume-led growth and market share improvements, something that we have been continuing to do throughout during these challenging times. We also are looking at new from within the core and the adjacencies, capturing new revenue streams to further strengthen the core, continuous efforts in catering to evolving needs. New product revenue, for example, in consumer brands for the quarter was from 13%, contributed 13%. We have attractive targets for breakout in growth. For example, we have Vivia that we have just launched, and we also have the Gold men's range. I don't know if you remember. Gold was a brand that we had lost a little focus along the way. We brought it back, revitalized it in the current situation, and making good inroads in making that thing grow, making that brand grow. Efficiencies and effectiveness. We also, before that, we also have the new businesses and internationalization, where we will explore attractive opportunities in new spaces and in international markets. So that's a segment that we are continuing to focus and make sure that we grow that and grow it well. While we're doing all this, we'll continue to be efficient in what we do and enhance productivity to further enhance capacity and improve growth. On the next slide, if I may. Right. So as you can see here on the screen, we have a snapshot of some of the products that we have. On the right of the screen, you can see some of the new products launched by Mori. And on the left, we have some of the products that have been done out from the home and personal care segment. Next slide, please. On Atlas, we have the curriculum development and the lesson planning platform by trusted educators. We have also, like I said previously, we have targeted and launched it out for the grade 5s. And we are also, on the other side, we can see that we have commenced commercial production of our UGMP compliant plant. So for the financials, I mean, this is where everything boils down to in the end. As you can see, it's the numbers here are exorbitantly very good, but then we're comparing with a fairly low base in the first quarter last year. As you probably know, it was a terrible memory to have. We were all, right in slap bang in the middle of COVID. We had restrictions and all kinds of things impacting us. So overall, we still have good growth, good recovery. Our debt to equity ratio went up slightly, but then that was mostly fueled because of the growth that we had both in the healthcare and in the consumer segment in terms of working capital requirements. But overall, the financials show a very strong and healthy position of the company, with plenty of room for it to leverage its balance sheet and use a war chest if needed to make good acquisitions to expand and grow our business. I'm not going to read numbers off the screen because I think you probably will have access to this presentation anyway. So I'll just talk briefly on the segments now. On consumer brands, so that's the second highest contributor to revenue, both with over 30%. Operating conditions, other than the massive inflation that we saw, remained favorable with low impact from the pandemic, and the schools operating as usual until the end of the quarter. As expected, commodity prices, exchange impact, domestic inflation, I mean, whatever could go wrong went wrong in the environment, impacted margins, and the sector had to work with multiple strategies to minimize not only the margin pressure, but also to reduce the burden to the consumer. It's very easy to pass on price increases if you really want to, but we also have this duty of care that we should make sure that we manage and operate as efficiently as possible and reduce the burden as much as possible. Price changes were done, but they were done very cautiously, taking into account the impact both on the consumer and also on how much the market could actually sustain. On healthcare, that's the highest contributing segment. The contribution to revenue, profits, and was around 60%, while the country faced challenges in terms of shortage in medicine supplies. We still managed to ensure to work with our principals to ensure continuous supply. We did see a slowdown in COVID-related revenue as expected, which is thankfully behind us now, hopefully. However, our core growth for hospitals was commendable. So we saw hospitals going back to before COVID level of operations. Both our pharma manufacturing and distribution arms marked key milestones. Hemas Pharmaceuticals was recognized by Bureau Veritas as a company with good distribution practices, and the flagship manufacturing plant at Homagama commenced commercial operations during the quarter. On mobility, revenue and capital employed contribution is less than 5. Like I said, this is a small arm. It's a support arm for the business of the group. Year-on-year revenue degrowth was mostly because of the divestment that we did in Spectra, as we announced in October last year. Both the aviation and maritime segments saw challenges with shortage in fuel, elevated fare, and reduced volumes at the port of Colombo. This is a part that is, I think, of the entire presentation, which is very close to our heart. We whatever we do, in the end, we end up giving back to society. Hemas focused on supporting our communities by creating a social security safety net to communities affected by the economic crisis. We partnered with UNDP-led private sector giving facility to ensure that vulnerable communities had access to essential and near-essential medicines. We partnered with a few like-minded corporates and launched Medum Mehevera, an initiative committed to provide dry ration packs to 100,000 adversely affected families who are facing hardship as a result of the economic crisis. The Feeding of the Future project, with assistance of the early childhood care development officers around the island, provided nutrition packs valued at 25 sterling pounds each to 367 families from 15 of the worst affected Piyawara schools in Vaunia, Mullaitivu, Kilinochchi, Monoragala, Mana, and Ampara. This is a program that we did with one of our partners out from the UK, where our contributions were collected from the UK and then channeled to well-deserving families. The short-term aim of Feeding the Future project is to provide essential nutrition to preschool children to ensure their development needs are met. In the longer term, once the crisis in hand is abated, the project plans to focus on other needs. On the responsibility on slide 60, very good. So in addition, we have started construction of a new Peerwara preschool. Plastic continued to remain a priority for the quarter. 7,000 kgs or 7 metric tons of plastic was collected. We have a number of upcoming initiatives, including partnership with Clean Tech, where plastic litter will be collected from public places to ensure responsible disposal of plastic waste. We have the Negombo Lagoon Cleanup Program with Clean Ocean Force, where we expect to collect about 3.6 metric tons of plastic per year. We have a beach caretaker program, Orototua Beach, which 7.2 metric tons of plastic being collected per year. We continue to work with partners to carry out reforesting and other initiatives focused on protecting the endemic species of Sri Lanka. With that, I think I spoke a lot and hopefully managed to give you a brief snapshot of what Hemas is all about, and how we did in the last quarter. Thank you.